What we got? What we got? Aviva, MNG. So yeah, start with MNG. 3 day chart, as you can see, similar to Lloyd's, is come down and it's in the box. We shall see. Breaks that 193 level and we're moving away and getting out. Looking for lower sides, perhaps somewhere. Um, you can see the previous lows in there for a start. Um, Maybe up to there. Yeah. So if it does break lower, a fair old bit before getting into there, so it might be in that area there. If it does break low, at the moment, just waiting for confirmation. Probably going to have to start looking down daily chart, looking there, seeing where it's going to pop down to. Um, Strong reversal signs or something that I look for. Probably, maybe looking for when it there strong gap up, little resistance. There was nothing in there in that gap there, no consolidation, just a strong gap down. So it's probably leaped. So it was able to leap quite firmly back up to those levels. Might be a bit harder this time to climb my way back up. Curling around, little wicks, kind of feathery with the wicks there. Um, so what's happened? Is it something to do with Keir Starver? So MB. So just waiting for the. So obviously there the triple EMAs have inverted. The triple exponential moving averages have inverted before coming back up. Um, we need to wait for those to revert back up, get a positive move over, and that'll be the first signs of the reversal. Perhaps difficult to see a strong sign at the moment of reversal. Bulls are certainly trying to, people are trying to buy in there. Price currently ain't really rising up. Nothing really strong in there, nothing strong and aggressive like there. Bounced off that support level. Um, so, is this something M&G? So, that's the M&G. It's just ranging, isn't it? What's the range in there? Scouts 5-6% over a month. I don't know if it's a dividend thing or not. Aviva, they're bam, bam, bam in the box again, fairly lateral. What are the swings like on that one then? Yeah, 37 days, 5% really. What's the full range on that? 8%. Swinging that since April 2024, so it's a year. 5, 2, 6, 7. Yeah, returns on the swing trade potentially all right over the year. Slow and steady wins the race, but yeah, back in the box again. Back in the box. Looking for some sort of reversal there. That's pumped up today quite nicely. Was that today or yesterday? Yesterday. Yeah, strong up there. Trying to hold support, trying to hold its way back there above 460, that 460 level. Just trying to break up above there. Butting up against the moving exponential. It's 21 days, is it? Moving average. Um, yeah, so potential buy-in and swing in. I don't know what necessarily, because this has happened like M&G, Aviva, Lloyd's had a massive old kerfuffle, didn't it? What's the look wrong with Lloyd's? Is that back in the box or what? Yeah, back in the box. So some of the bigger M&G. Let's put Legal in General up there as well. M&G, Legal in General is kind of there. Yeah, again, very lateral, very, very lateral with the UK financial institutions there. I don't know about this too much about this, but one of the solar things there I want to watch out for is um, what's Keir Starmer doing. So it's popped up there with the hope that Keir Starmer is going to build bazillions of new houses. Still got a fairly high interest rate. We've got in the UK. There's what is the interest rate cycle of cuts going to look like, and how that would affect price. But yeah, it's firmly batting up there, just squeezing in, compressing, put a lot of price compression in there. Hopefully, really do want to squeeze up and outwards with a really fantastic potential, something of a potential upside there. Still under the 236. Let's check my settings on that a sec. Visibility. The on log scale. Yeah, based on log scale. Okay, good. So yeah, get above that red line and potentially in business. In the meantime, unless he gets above that 236, it's not going to do a lot. It's just going to be sat there, maybe even consolidating for a while. Accumulating, who knows? I wonder if there's going to be an accumulation phase. What is the turnaround on Keir Starmer's government actually getting those? What is the lag, the time lag? So Starmer's government, Free Gear Keir's government, have decided, they've announced that they want to do the houses. Price goes up. And there's sort of various tax tailwinds, capital gains tax. Not sure what's happening with the housing market. You probably might know about all that with the cost of borrowing for mortgage holders. But also, it's things like rate cuts don't just affect them. It's like the actual cost of capital for the people who are the mortgage lenders. For the house builders, the cost of doing things, the cost of money, the cost of ability to invest those things, get hold of the money and invest. What are the UK bonds doing? All that sort of thing, all affected. And Also, what is the decision making? Is there some umming and ahhing going on? Is there sort of people, the government and vested interest in their house builders faffing around and making it difficult to actually get these things done? So there's great positivity there. Oh, great, millions of new houses getting built. But really, what's going on? That probably looks like the faffing around, sorting out the details and the self-interest areas around here, making it more difficult. The bright promise of a bright future, whilst the UK system as a whole just fucks it up again. And then, yeah. So massive, deep, fucking nice, big, decent descending column channel there with decent breakout. I'll just take a conservative off from the top there down to that midpoint. Let's have a look at that. Put an arrow on that. Let's have a look at that. Initial. Yeah, or yeah, potentially that might actually just break out and go up. Um, let's have another look at that full extent. Where does it break out from? Where is it going to break out from, eh? What level is that going to break out from? We might have confluence up there. There we go from that. Where's that high there? January 2020 high. So those sort of levels, it always comes out to the highs, always pops out to the highs there. Different aspects of it, different price targets, comes out generally to the highs, quite often where there's levels of confluence there. Identifying points where there might be in the future some kind of reversal, different high points there. Bits of research will see, detailed research will see how price moves back up and how there might be confluence with the Fibonacci retracements, things like that, and also with previous highs. Not just the absolute high, but sometimes just the underside of it as well. Okay, so there you go. Next energy. Oh shit, I don't know anything about that. Yeah, so there you go. There you go. That's what I've got. So what's been main thing is, why is this commonality a shape with the UK housing? UK financial institutions there. What's going on there? What is this? What is this? Eh? All in the box. All in the box. Sort of fair, really, really lateral, well-established areas, sort of fairly reasonably well-established areas of, I suppose you call it support. Why is that? What is the more macro aspect of it? Got the technical aspect, perhaps, which is it's a new support, just thrashing out a new support area. 1, 2, 3 touches. Hopefully, away it goes. Any more than that, well, got to watch out. Yeah, been through that. Diamond tops on Lloyd's and all sorts of things there. Massive capitulation. Would have been nice to have got a short on that, but I've moved away from those things. Okay, there you go. There's my take. There's my take on it. More questions than answers.